pitch in and do their bit and keep Reliance some company. Both of them have moved to the highs of the day. That's HDFC for you and HDFC Bank also, with gains of about 0.25%. So some more sort of names on the upside of the screen. Otherwise, the index is flat. Let's get more trading ideas in then. Sandeep Wagle is joining in. Sandeep, happy Friday to you. What are the stocks you're going with today?
Afternoon, Surabhi. I would go with a sell in a PEL, Pyramid Enterprises, stop loss of 2322, target of 2250, and a buy in a IGL, stop loss of 278, target of 293.
Okay, that's a buy on IGL and sell on Pyramid Enterprises. Thanks a lot for those trading ideas, Sandeep. Deepak Jasani is with us, Head of Retail Research at HDFC Securities. Deepak, hi, good afternoon. I wanted your thoughts first on Sun Pharma, since that's the stock which has really been stock of the day today for all the wrong reasons. 390 on the stock now as we speak. Your thoughts?
Good afternoon. Now, Sun Pharma basically, like the other two mature pharma stocks, had seen a sell-off a few months back. The street was broadly comfortable as long as the fall was due to FDA inspection or due to litigation in the US about the launches. But the latest reason of being corporate governance or related party transactions or tax issues, this is something the street is a little more, lot of discomfort with. So in that sense, the company will give a clarification. The street will again debate whether that clarification is worthy to be relied upon and to what extent. Analysts will have their own views. So net, I think having broken the technical levels of 391 and the stock finding it difficult to go above 391, it means that fresh downside could keep happening in the stock, and you can only trade in the stock when you think that the impact of the latest event is out. I think investment, you will have to wait for investments till a lot of clouds are cleared.
Okay, speaking of clearing clouds, they seem to be getting cleared for Alchem Laboratories. The stock just shot up because of that news. No Form 483 after the US FDA inspection. Otherwise, extremely range-bound through the course of the year. But not Sun Pharma, Alchem, yeah, that's the one that shot up. But also, equally quickly, some profit-taking is also setting in. Deepak, just want to get your thoughts on, something like HUL, great numbers, no problem whatsoever with volumes. But the market seems to be a little hesitant now in buying these stocks at current prices, given where the multiples already are. How would you look at the staples universe?
Yeah, so consumer staples has been a preferred or a favorite sector for most strategists and most analysts in the current circumstances. But one will have to be aware of the valuations which you have mentioned. Valuations are quite stiff, and the fact that for the last 4 or 5 or maybe more quarters, they have reported good numbers continuously. So now we are sort of pricing the stock for perfection. So in that sense, moving up from here would be a little difficult unless we see a lot of FI flows or domestic funds, domestic investment coming into the mutual funds. So till that time, I think probably the stock could remain range bound, susceptible to minor sell-offs.
The one stock which has seen quite a bit of sell-off despite very good numbers, Deepak, is Z Entertainment. Your thoughts. Clearly, there's more, something more than what meets the eye in terms of what's happening here. The promoter stake sale and everything, of course, in question right now. But as a stock at 440, your thought process?
Yeah, so now I think even Sun TV is down for that matter. So I think it is more to do with the space as such. In addition to the fact that the promoters are planning to pare their stake in the company. So whenever such situation arises, then a lot of questions will arise about whether they have been following proper practices, whether whatever has been displayed is the right picture or not, etc., etc. So such things, and the fact that they have not been able to find out a suitable match or suitable buyer so far for their stake probably could mean that the process could take longer than what people expect. And that is why tired bull liquidation could be happening from the FNO side or even from some investors.
We were discussing this sort of 2-3 days back. Remember, we discussed the fact that the market's message is important here. On good numbers on a stock which had anyway not seen a rally, it was still down, and it was really bizarre the way promoter straight away had come and said that selling the stake. Before that, the way the stock had spectacularly fallen from 600 to 400. I think this really is turning out to be a very interesting story.
Again, we need people to speak up. We need promoters to speak up and not leave the market guessing. Just wish that happens on stocks like Sun Pharma and Zee Entertainment soon enough. Deepak, let's talk about one of the big movers of the day and, of course, last several months as well. Reliance Industries. Market seems to be taking the numbers with both hands on the core business and also extremely excited about, the retail as well as the telecom business. And at the same time, we're seeing so much of pressure on a beaten-down name like Bharti Airtel. Would you go with this trade, the consensus trade that's playing out today? Do you think this is going to be the theme over the next several months as well?
Yeah, on the telecom space, we have been cautious for quite some time now, whether it is Idea or Bharti, because of this competition from the incumbent. Their business models and have gone sort of bizarre. And secondly, the continuous need for capex, whether it is spectrum, license fees, or setting up towers and such like. So that sort of is pulling down their return ratios and sort of endangering their balance sheets. So, but on the other hand, Reliance, I think there are two camps. One is who is very bullish on the stock, and the other not so bullish. People generally would feel that the telecom, the retail space has been performing well. The other two, the refining and the petrochemical, are broadly commoditized in sectors. So now till if the company is going to split up, there is the expectation building up that there could be a restructuring of the company maybe 6 months down the line or 12 months down the line, where you would be given free shares of different segments. On the other hand, the capital ratios are not, the return ratios are not so great, and the debt, the gross debt is too heavy on the books. So these two things are sort of offsetting each other. But for the time being, I think the stock is having a good time.
All right, we leave it there today, Deepak. Thanks a lot for your time today. It was good talking. A couple of interesting stock moves right now. Just pull out the intraday chart on a Jet Airways. That stock has moved to the low point of the day, and in fact, just look at that. And you just pull out the futures plate on Jet Airways. That's the stock. Now the stock is down 1.5%. I think we'll have the futures plate. If we could show the futures intraday chart, I think we have that now. Anyway, that's the futures rate. The 38 rupee discount. I think the future is down 6.5%. Now keep in mind, it's still in F&O ban. But there's still people who are shorting the stock because the open interest is still going up, and there's a large discount happening on the stock. So that's interesting, of course. Now, Sun TV and Sun Pharma are not related, but whatever it's worth, Sun TV is also a stock which is collapsed today, 7% down on that stock. Apart from that, there's South Indian Bank, which is now at the low point of the day. Now there's a lot of speculation around South Indian Bank, what's happening. It's a stock which has pretty much done nothing. So these are few stocks. On the way up though, KPIT Tech, that's been some mover over the last few days after that disappointment of a result, but you've seen some short covering play out in this. But the mid-cap index is down 120 points, and the market's being spared the blushes by Reliance and Kotak. Kotak is up about almost 2% now, and Reliance, of course, still remains closer to the high point. So that one up about 4.5%. Ashwani and Sudarshan with us for some BDST calls. Ashwani, you go first. Thoughts on index and your stock calls?
Well, HDFC Bank has just fallen $10 from the highs, so maybe the results are getting priced in. But having said that, if you made some money on banks, take it off, because for the moment it does not look like today it's going to break down, or maybe on Monday that happens. So from the highs, Bank Nifty has done a little bit. Having said that, Indalco is a buy with a stop of 204, target of 218. Indigo is a sell with a stop of 1085, target of 1050. And Canfin Home is a sell with a stop of 275, target of 260.
Okay, all right, those are Ashwini's calls. Sudarshan, what are you specifically going with now? BTST, STBT?
Well, yes, it's BTST, but quickly on the Nifty, we have that level of 10,850 on the cash index. That is the key level on Monday. So you do whatever you want, but below that you can only go short or do nothing. So that's the critical level to watch. I have Kotak Bank as a buy. That bank has been outperforming today. So consider going long in it. 1220 is your stop loss and 1260 is the target for the next week, of course, not as we go into next week. And Berger Paints is a buy, another outstanding performer with a stop at 322 and a possible target at 331.
Okay, Sudarshan, we sort of missed you in the morning, but I wanted your follow through on what are the next levels for Reliance, because I remember you've been long on the stock and you said all dips are buying opportunity. What are the next targets here, slightly longer term?
The longer term targets for Reliance are 1500. This is a little ahead in the future, but Reliance is an investment idea. Even at current levels, if you buy it, there's a lot of money to be made.
Fair enough. Actually, just getting back to your Indigo's call, I understand that's a trading call near term, but a couple of days back you were making this point that the Jet's loss would be Indigo's gain, and perhaps this could seek higher levels. Is that broader call still intact?
I am hoping, because nobody is going to tag Jet for a long time given the conditions. But this is a BTST type call. Longer term call sustains. We have to use some airline.
Yeah, no, that point is really good. For today, of course, there's a bit of a decline which has happened across the aviation sector. But I'll tell you something, one of the stocks of the day today is, it does not move high volumes, but is Linde India. Now, just pull out that chart. A few days back, you had, of course, that promoter announcement, delisting announcement. Yeah. Now, the reverse book building is on, and of course, Nimish has been tracking that like a hawk. And Nimish, the inference that you're getting is perhaps the delisting is going to fail.
Well, Anuj, again, this is not my assumption. I'm just looking at the BSE data. For it's a reverse book building and it's live on the BSE, so we get the data on a very lively basis. Looking at the data, it do suggest that maybe it's likely that the delisting offer may fall. I'll just run through the numbers so you'll get a fair idea as to why I'm saying this. The delisting offer is closing on Monday, which is January 21st. If you look at the BSE data, one of the largest shareholder, which owns close to 86.5 lakh shares, they have tendered the shares at a price of 2025 per share. That means at a significant premium to what the closing price even yesterday was around 750, 780.
2025. I'm wondering if there's a typo somewhere. I mean, that's a humongous premium.
So that will happen. You want to tender.
So again, and given that he's the most influential investor, and without that investor, the delisting technically can fail. So I'll explain that number as well.
We can infer that that's Reliance Mutual Fund.
That's Reliance Mutual Fund. It's in the name. It's in public domain. That Reliance Mutual Fund owns close to 10% stake.
Yes.
Now, so we don't know that 86 lakh is whose. We are assuming that it's Reliance Mutual Fund who's put in the bid at 2025 rupees per share. Now, if you look at that data, they own close to 10% equity of Linde India. Now, for the delisting to go through, at least promoter has to go to 90%, which means they need at least 15%. If Reliance offer is rejected by Linde India, which looks very unlikely that they'll be able to gather the remaining 15% at their desired price. If they don't get that exact 15%, then they have to come back and sell the shares in the open market. So technically, if that was the sense I was getting on earlier as well, that if Reliance doesn't support this delisting offer, technically it can fail given the fact that they own close to 10%. Now, but the only catch here, Anuj, is if you look at the BSE classification, the 86 lakh which have been tendered, it still shows that it is not confirmed bid yet. There are two options: bid confirmed and bid not yet confirmed. It is still in the category of bid not yet confirmed category. Maybe there is a technical reason why it's not classified as confirmed yet. But given the data which is clearly visible on the BSE website, it do suggest that most likely, given that it's such a high premium, the delisting can fail, and maybe that's the reason that the stock explains it's locked at 20% down circuit.
Okay, and large volumes being traded today on Linde. I think that's if we get the last graphic plate, just to make the point, 2 million shares. So that's that's a lot of volume that you're seeing. Now, of course, it's frozen, so you can't perhaps have much volumes from here on. But on decent volumes, the stocks down on lower circuit. So that's quite interesting.
Absolutely, and I mean, a lot of disappointment if this doesn't actually go through. The stock ran up so much in anticipation of that listing. And now there seems to be a spanner in the works. Thanks, Nimesh, very much for getting us the numbers and the data there. Actually, speaking of Reliance Mutual Fund, the view we are getting is from that AMC. No, we're not discussing Linde with them, but an overall market outlook. We caught up with Sailesh Rajbhan and Sanjay Parekh of Reliance MF regarding their views on the market, the sectors they like, their outlook on earnings and more. Take a look.
See, you look at the markets, they've actually done very well in the last few months. In fact, they've come out of all the initial difficult news flows regarding elections, and they are now actually far more stable and consolidating here. I think markets are purely looking at fundamental information flows which relates to better earnings, or because we're in the earnings quarter now. So I think it's more earnings and the near-term events which are creating this volatility, and I think as earnings start improving, we have seen already 2-3 quarters of improvement. As we get into more earnings improvement over the next few quarters, I think market should continue to do well.
So is there enough spunk in the earnings to take the market higher, beyond 11,000, etc.?
See, you will always have one or two sectors underperforming or not delivering up to expectations. If you look at it, auto was possibly a bellwether sector doing phenomenally well for the last 2-3 years. We have seen some disappointment in the auto sector in the October, November, December reported numbers which came out on a monthly basis. And I think those numbers were definitely below market expectations that were muted. But I think 9 out of 14 sectors are now delivering, and one sector has actually weakened a bit, which I think is very normal. In an economy, you'll never get all 14 delivering to strength, because then that's the peak of any particular economic growth. Our focus is continuously work towards buying companies which are not priced for very strong growth, and they can create surprises.
As an investor, will you go and buy rate sensitives? Will you buy NFCs now? Will you buy PSU banks?
So I'll tell you, the way we position, and we will not change it, is that we like the corporate banks, the larger corporate banks, where the asset quality problems are receding, both on the private and the corporate and the PSU and the larger names. There we believe, we've seen them doing well, but they will be actually the largest contributor to earnings growth next year. In fact, next year FY20, almost 50% of the earnings growth will come from these 3 large corporate banks.
Some of these auto names have created large wealth over the last decade, but last 2 years have been biggest underperformers. The likes of Maruti, for example, two-wheeler stocks. Your thoughts on what's going wrong here, and is this a good time to accumulate some more, or is this story changing a bit?
Large leaders in auto, we believe that it could be a pause for a while before we get the growth back, and that's why, because we've seen the biggest positive has been crude reduction. Crude for every dollar is $1.5 billion in benefit. This goes either to the consumer or to the companies or to the government, and that $35 billion of benefit will reflect in the fourth quarter in some way, and that's why we believe auto, you see pause for a while, but longer term we are positive.
Valuations are pretty expensive for names like HUL, but do you think they'll continue to do well because of the good growth that they've been showcasing?
See, the consumption space has many sub-segments to it. The consumer staple space is definitely pricey and way above even longer term averages. So that is one segment of the market where leaders are well priced for growth, and a lot of these segments in consumer staples especially cannot do disproportionate growth beyond what the economic activity and normal consumption volumes actually allow for, because you cannot have suddenly an operating leverage plays in these kind of entities, right? So I think they are well priced for growth, especially the consumer staple side. But there are other consumer discretionary area, domestic consumption driven cyclical but discretionary spaces. Those are all well poised for growth because they are coming out of many years of slowdown, plus also the whole operating leverage ability exists in those businesses, and they are much lower priced than the leading consumer staple businesses.
What are your expectations from the budget this time around? What do you think will go down well with the street?
See, I think the continuation of fiscal discipline will actually be the most important thing which people will be looking forward to. Second is, a lot of policies are now generally outside the budget, and this being generally been a kind of a very short budget, a vote on account kind of thing. You will not have The policy decisions are already in the system, they are already being executed and working. I think the relevance of the budget will be primarily from a fiscal consolidation point of view and how they are approaching the subject, given that it's an election period.